Hey, welcome back everyone. It is time for another red hot covered call video. Hey, look, if you searched YouTube and you found me and my channel for the very first time, what we do here is quite simple. I show you my trades, we talk about them, so you learn something. See, this sometimes confusing, sometimes overwhelming strategy of selling premium, writing covered calls, selling cash secured puts, it's best to understand this investment strategy when somebody shows you a trade, shows you the basic trade, straight talk style. And that's what I do. So look, if you like what we're doing here at the channel or the idea of using covered calls and cash secured puts to generate that guaranteed weekly and monthly income, then I want you to subscribe to my channel. It's right there in the corner. You see it. And hey, look, if you like this video today, I want you to bang that like button. It lets me know you like what I'm doing. Now look, if this is your first time into my channel, I've done over 130 videos helping out others with this strategy, hoping they would watch my videos, watch me talk about a trade that I put on and how it turned out, giving you a look into my world so maybe it will encourage you or motivate you to do the strategy. Or if you're already doing a strategy, maybe you see something in my game that ups your game, and that's all we want. Now look, today you're going to see 5 of my trades, and I think you might find it interesting. Now this video might go long, so let's go ahead and jump into this right now. Now before we get going, I bring up my cost basis tracker. If you haven't downloaded any of the free spreadsheets that I offer them up to you for free, and it's a great starting point. Now look, I use every one of those spreadsheets every day, and I offer them up for you for free if you want to use them. Look, you don't have to use them all the time. In fact, you may even find other spreadsheets that you want to use. But my point to offering up the spreadsheets is that you use spreadsheets to keep the numbers in front of you. That's the key. The key is keeping the numbers in front of you. So if you diligently use your brokerage to do that, or you use spreadsheets to do that, or you even use pen and paper, that's fine. Just make sure you're doing that. I hate talking to somebody and I say, hey, how many covered calls have you written? Well, I'm not sure. Well, what's your cost basis? Well, I'm not sure. How do you even know where your profitability is if you're not keeping track of this? So I encourage you to download my free spreadsheets and use them. And here's my tracker spreadsheet where I keep track of all my trades. And as you can see, we've done quite a few already for 2018. Let's go ahead and get to that right now. So the very first trade we're going to talk about is Southern Company. I haven't told you about my purchase of Southern stock because really it was a dividend purchase. It was a dividend play for which I was going to keep the shares. I bought low. I felt like I bought low down here. And because they pay such a juicy dividend, I was just going to collect it for a dividend play. Well, if you remember my Dominion video where I was down hard on Dominion and decided that I thought Dominion bottomed, so I sold a cash secured put. Well, I'm going to show you how that trade turned out, but it inspired me to do something with my Southern trade. And sure enough, as Southern started to move higher, I went ahead and wrote a 47 covered call, ending up picking up about 45 cents. Hey, that doesn't sound like a lot. I never expect to have my shares taken away. And in fact, I think Southern is going to do exactly like this. And I'm going to be able to buy this option back. For me, this is one of those plays where I feel like I'm doubling my dividends. Remember that video I did where I like to write those out of the money covered calls where I think the stock will never get there and I collect the premium as if I'm collecting another dividend? It's one of those little games I play to stay motivated, and this is what I did with Southern. And sure enough, as you can see with Southern, which is now trading at 46.47, I really don't think it gets to 47. But if it does, hey, I get 47 for my shares. I will have picked up the 45 cents for the covered call. I already picked up a dividend, and in fact, the expiration is 1 full week past the X date, so I'll probably pick up that dividend. So for me, this is how I like to trade stocks with limited volatility. Lower the bar on the premium you want to collect and just pocket the crumbs. Because the premium is now probably 20 cents, I could probably buy this back, wash my hands of it, and we look to do the next one. But hey, look, just wanted to show you this trade. It's still going, and I'll keep you posted as to how this trade turns out. Now, Conoco is one that I've talked about a lot on my channel. Look, when oil stocks crashed, I was left holding the bag of all my high dividend paying oil stocks. And emotionally, I was holding the bag. And I'll be honest with you, it was a tough time. That's when I made the decision decision. I was not going to sit on my hands. I was going to control my destiny. And if you remember from that, when I bought Whirlpool to write a covered call and Whirlpool fell from 185 all the way to 159, I wrote covered calls all the way down. I did not sit on my hands and I felt much better about the play. Now, Conoco is one of those stocks where I am left holding the bag from 3 years ago. If you remember, Conoco hit as high as 87 and I am in deep. Well, Conoco has since fallen over the past couple years, and because oil is finding itself back to $70 a barrel, look what we get. We get an upward movement, little bit of a sideways action after a peel off, and now things are looking good. Well, look, my cost basis is $65.50 on this, and I made a promise to myself when we got to a point where I could write a covered call, collect about a 50-cent premium, I would write a 66 covered call and wash my hands of this 3-year dog. Now, I have collected dividends along the way, so this trade is a little more profitable than me just having a cost basis of $65.50 and I'm getting out at 66. But at the end of the day, it's a pathetic investment. But the takeaway here is this. This will end up being a green trade for me because I had the patience, I wrote some covered calls along the way, and now it's a green trade. We are not taking an L on Conoco. And hey, look, this 66 covered call expires next week. And I'm going to be popping a Samuel Adams and I am going to celebrate that I was able to recover from this. Yeah, I didn't make that much, but at the end of the day, you have to know the history, and this is going to be a green trade. Now, I've talked to you about my Chevron trade. I love Chevron. In fact, go back to my video channel and you'll see just 3 videos ago, I talked about picking stocks that trade in a range. Chevron is one of those. Chevron's one that I will buy low, sell high, I'll trade in between, and I have no fear. See, Chevron doesn't fall off the table with bad news, and it doesn't rocket to the moon on good news. It trades in a range, and I feel like I can make money up and down and not have that fear of missing out when I write that covered call. Well, in the case here with Chevron, again, I bought it at about 113. I wrote multiple covered calls and bought those options back, alleviating the obligation, collected a dividend along the way. And my last covered call on Chevron was a 30-day covered call for which at 113X, I wrote a 119. Thinking, you know, if my shares are taken away at 119, not a problem. And I'd probably buy Chevron again and keep doing it. Well, Chevron got on its horse and headed above 125. And now with expiration this coming Friday, my shares are going to be taken away. Now, I'm not going to buy this option back and then look to write the next covered call. Why? Because I would be adding from 119 to 126 to my cost basis, right? That's going to be about a $7 add to my cost basis. So the next covered call I write on Chevron will not cover that. And I'm not going to write an out of the money strike collecting, let's say, 130 on the shares. That's pie in the sky. See, Chevron can fall from 126 down to 119, and I'm left holding the bag of all of that cost basis add. So in this case, I'm going to let my shares be taken, and come Monday, I'll have that cash, and I'll look to buy another stock and look to write another covered call. This was a successful 30-day trade. Now, I talked to you about Dominion, where I am feeling the pain of Dominion. That's that video where I talk about selling that cash secured put. Now, look, I wrote that cash secured put down here at 65. And if you remember, I got paid a fat $1.97 for an at the money cash secured put. And the idea was I felt like we had bottomed. Most utility stocks are heading higher. Well, figuring limited risk, I would sell that cash secured put, collect that $1.97, reducing my cost basis. And quite frankly, this would expire and I would pocket that and we move on. Well, what ends up happening is it heads higher. This $1.97 falls down to 80 cents. And of course, you know me, I'm looking at that saying, with almost no effort and not much time, I'm going to pocket a $1.10 in cash secure put money. So that's what I did. I paid 80 cents, bought this cash secure back, alleviating the obligation. And now, quite frankly, I am looking to do it again because look at where we're at. We're at 66.10. It has had a little bit of a run. I think it might peel back. I might write that same 65 strike and do it all over again. On these low volatile utility stocks, you have to really pick up those crumbs and stay motivated to be playing Dominion. Yes, stay motivated and look for crumbs. Now look, we're going to talk about Microsoft real briefly because in my last video, we talked about how I bought Microsoft down here. I've been playing it for weekly covered calls. The last trade I made was a 96.50 covered call. The last trade I made was a 96.50 5-day covered call. I ended up picking up $2 for that and felt good. Then as Microsoft started to peel off, I'm thinking, man, I like that support line right there. I wrote that 92.50 cash secured put and picked up $2. Figuring I would play right in the middle here. And if Microsoft went higher, I'd be able to buy back this cash secured put, pocketing that money. And if Microsoft fell off, I'd be able to buy this option back, pocketing that money. I end up picking up some Microsoft shares a little bit cheaper, and I can continue to look to write more covered calls. Well, turns out Microsoft ended up right down the middle. I could have let both of these expire. Well, hey, look, for me, it's a green trade on both sides because I ended up picking up $1 on the top side and $1 on the bottom side. Hey, look, those are my last 5 trades. And quite frankly, I don't know if you learned something from it, but it's a little peek into my world. And like I mentioned earlier in the video, when you see somebody talk about their trades, whether you agree with the trade or not, it just gives you a peek into their world and you could just see it. You could see it, you could feel it, and that's where I hope you truly benefit from my channel. I hope you benefit from my channel, and I do always wish you the best in trading. Now, hey, look, before I let you go, I am going to talk about my next 2 videos because talking to my man Jerry, he says, hey John, you need to do a video where you talk about damage control. Because Jerry believes about half of us out here always have bad trades. And always talking about the good trades doesn't address the issue for those cats that are feeling the pain with a bad trade. And I tell Jerry, I get emails all the time from people that's looking for advice. Now look, you know I can't give you advice. But what I can do is show you trades that I have lost or am down holding the bag. We could talk about them so maybe somebody learns something from it. I'm going to call that my damage control video, and I hope you come back and watch it. And look, I get a lot of requests for, hey John, how do you pick stocks? How do you pick stocks? So I'm going to go ahead and use my CTP dashboard, and I'm going to show you how I pick stocks and how I use the technicals and, quite frankly, a gut feeling. I know that's kind of mushy and it's like trying to hold Jell-O in your hand, but really you have to have a couple things. You have to have that gut feeling, your technicals, you have to have your financial education. You know, we're going to talk about all those things because, again, it's easy for me to just show you all my winners, but I want to help you. And if I can help you by maybe showing you how I pick stocks, I think you're going to learn something, and I think you'll find it beneficial. But look, before I get going, if you like what you heard today, subscribe to the channel. If you like this video today, be sure to bang that like button. And hey, look, until next time, I hope all your covered calls are profitable.